Hello and welcome to today's video. Today I will be covering latest earnings and earnings call from the darling of the cycle, Nvidia. What kind of the earnings did the company have and what interesting information was shared in the earnings call are all the topics of today's video. So without further ado, let's start. Before we start, disclaimer, nothing here is a financial advice. I'm just one person with a microphone. Always do your own research. Now on to their earnings. So revenue for the third quarter reached a record 57 billion, rising 62% year over year and 22% sequentially. The data center business remained the dominant driver, powered by accelerated computing, AI modeling, training and agentic applications. Data center compute revenue also hit a record at 43 billion, increasing 56% from last year and 27% from the previous, while networking brought another record at 8.2 billion. GAAP operating expenses grew 36% from a year ago and 8% sequentially. On a non-GAAP basis, expenses increased 38% year over year and 11% quarter over quarter. These increases reflected higher compute and infrastructure costs, rising compensation tied to workforce expansion, and engineering investment required for a new product development. The balance sheet strengthened further, with cash equivalents and marketable securities rising to 60.6 billion, compared with 38.5 billion a year ago and 56.8 billion last quarter. Inventory increased to 19.8 billion, up from 15 billion sequentially, and supply-related commitments reached 50.3 billion. Operating cash flow came in at 23.8 billion, up from 17.6 billion a year earlier and 15.4 billion in the prior quarter. The company returned 12.7 billion to shareholders during the quarter through 12.5 billion in share purchases and 243 million in dividends. Now switching on to earnings call, so some highlights. Nvidia has visibility to around 0.5 trillion in Blackwell and Rubin revenue from early 2024 throughout the end of 2026. Compute spending is accelerating as a major model builders like Tropic, Mistral, OpenAI, Reflection, Thinking Machines Lab and xAI scale aggressively. OpenAI reported 800 million weekly users and 1 million enterprise customers. Anthropic annualized revenue run rate reached 7 billion, up from 1 billion at the start of the year, and Nvidia continues to serve OpenAI throughout the cloud partners, Azure, OCI and CoreWeave. Now on to business momentum. So automotive revenue reached 592 million, up 32% year over year, driven by self-driving solutions. Nvidia is partnering with Uber on a level 4 capable autonomous fleet built on the Hyperion L4 architecture. Now on to guidance. So Q4 revenue expected to be at around 65 billion plus or minus 2%, implying 14% sequential growth on Blackwell strength. No China data center compute revenue is assumed, and expected GAAP gross margin is 74.8%, non-GAAP 75% plus or minus 50 basis points. Now on to 2027 fiscal year outlook. So input costs are rising, but goal remains to keep gross margins in the mid-70s. GAAP operating expenses expected to be at 6.7 billion, non-GAAP at 5 billion. Other income expected to be around 500 million, and estimated tax rate is around 17% plus or minus 1%. And lastly, macro and long-term drivers. So each country will fund its own AI infrastructure build out. Many industries have not yet engaged with agentic AI, offering massive untapped potential. Strong activity across autonomous vehicles, digital twins and physical AI for factories and warehouses, and growing wave of digital biology startups accelerating drug discovery with media platforms. Now to the technical side. From an earnings perspective, you really couldn't ask for stronger results. The tone of the call was confident, and the market initially reacted with a sharp rally in Nvidia that helped lift the broader indexes. By the end of the session, however, sentiment flipped and the stock gave back its gains, producing an ugly reversal despite the exceptional numbers. The stock recently broke below its trading range, about $200, and even dipped to around $173 at one point. If you follow the Bollinger Bands, a full 2 standard deviation move would place the next support area near $163. Nvidia continues to carry the market on its back, but recent price action suggests that that this role is becoming increasingly difficult. So this is it for today's video. If you want full written dive on this topic, check my Substack. Also, for more daily insights and market updates, check my X account. And lastly, you can check my website for more educational content. Okay, this is it. Like and subscribe as a sign of support, and see you in the next video. Bye.